It really seems like a nervous tic or bad habit, but our esteemed Bank of Canada has done it once again. Hey, welcome to another video. My friends call me Mike Abou. If this is your first time here and you want to stay up to date on the Calgary and area real estate market, or you're looking for ways to simplify the buying as well as the selling process by using specific marketing strategies and negotiating techniques, make sure to follow. Now, before we dig into October sales, the inventory, as well as the pricing, we need to talk about interest rates. Everybody else is, and they're affecting the pace of Calgary's real estate market. At this point, it's really starting to look like a nervous tic or a bad habit, but our Bank of Canada has done it one more time, ramping up the overnight lending rate by 50 more basis points. Now, what that means is that new home buyers to market will start missing around $160 or so from their monthly budget. Just like really people have been noticing their income trickling away in the form of interest payments for some time now. So are we going to see more of the same, or is this the last interest hikes? Now, we're seeing some continue to recommend interest rate increases as long as the inflation remains a problem, but others think that it's time to ease off interest rates and let the economy settle into the new conditions that the Bank of Canada has really helped create. In my opinion, and we'll probably end up seeing 2 or 3 more, but more along the 25 basis points. But really, the only honest answer is that we'll have to wait and see. We'll be right there with you though, monitoring the situation, and rest assured we'll keep you updated and in the loop. Now, with that out of the way, let's look at how Calgary's real estate market did in October. When it comes to sales, get ready to fall off your seat in surprise. Sales are down. Okay, I mean, that's no surprise and no shock to anyone. October sales did fall 15% compared to previous year. A drop like that is really enough to make anyone think that the sky is falling. But for us here in Calgary, there's less reason for worry than you might believe. This year's sales figures are more of a return to normal than a dive off a cliff. When we look at last year, Calgary saw its highest selling October ever. It was a blockbuster that pushed 35% higher than long-term averages led us to expect. So a bit of a fall off this year was entirely normal. And even with all of that, I mean, we're still 15% or so ahead of our long-term averages. And even though October has been a relatively quiet month. So if you were looking for reasons to pull off your hair, October gave them to you, but it also gave us plenty of reason for long-term optimism. Let's look at the composite figures. The apartment and row home market diverges considerably from the detached and semi-detached market. Detached and semi-detached homes led the way downward in October, declining by roughly 30%. Apartments, on the other hand, and row homes continue to go up and surge to the tune of 20% and 18% respectively. Now, as much as I'd love to say that that was enough, but it definitely wasn't to pull October's overall figures into the black, but it continues a strong long-term trend for apartments and row homes. And if you're a seller, I mean, you might want to hang on for a little bit, but if you're a buyer, you better do your homework. All of which really points to strong valuations for some time to come. And despite all of this, overall month-to-month sales in Calgary have stayed remarkably stable. We typically brace just a little bit at this time of year, but we've seen an almost negligible little sag in October instead of the clear, downward trend that sometimes develops this time of year. The bottom line is this: people are still buying homes, or at least they want to, and demand remains high. So make sure you're doing your homework and getting solid advice from someone that you trust when looking at real estate in Calgary. When it comes to inventory, it's down. Sorry to ruin the surprise there, but the inventory picture in Calgary is much less complicated than the tale of two sales markets we just discussed. There's fewer new listings are coming to market these days, and it's just as simple as that. With demand still high and sales remaining steady month over month, the inventory crunch is only beginning to be more severe. In fact, there's never been an October with this little available housing stock in Calgary's history. So inventory has dropped 20% since last October, and it trails long-term averages by more than 30%. So Although that is the case and inventory is down across the board, we do see an important pattern in the types of homes for sale. The more modest the house, the tighter the market. That's a simple observation, and it really makes for a pretty simple graph when we look at the ratio of home sales to new listings. So the higher the ratio, the faster the market is moving, and the faster paced market usually means a tighter market too. Overall, Calgary ended October at an 85% ratio, almost matching its 2022 highs, just as with sales, detached and semi-detached houses led the way and apartments joined them at around 83%. Meaning that row houses are driving the ratio up 2 whole percentage points, and that's some pretty heavy lifting. The sales to listing ratio for row homes currently stands at a wild 106%. That's right, you heard that right. Row homes in Calgary are selling quicker than they can be listed. The white hot market for row homes in Calgary is a major reason for supply is so low for houses priced between the $200 and the $399, and it trends up from there. Let's take a look at the nearly smooth curve on this chart and what's going on. If you see, months of supply is a projection of how long it would take to sell all the homes currently on the market if all listings stopped right this very moment. So if we're looking at it, and 2 months of supply usually means that we're in a seller's market. 4 months of supply or more means that we're moving into more of a balanced market towards a buyer's market. The range between 2 and 4 months is where really presentation, preparation, and good timing play their biggest roles. So from a bird's eye view, Calgary's real estate market is simple, but each segment of the market can respond a bit differently. Okay, maybe wildly differently, to the same factors. As always, knowledge is power. Next, we're looking at pricing. And when we look at pricing, Calgary is a rock. If you've studied Calgary's real estate market long enough, you know that it's not a boom or bust proposition. Compared to other Canadian markets, for example, say Vancouver or Toronto, Calgary's pricing tends to hold steady when other cities ride the real estate roller coaster, going up and coming down. October was no different. Sales have held steady month over month, and inventory continues to slide, which means that strong demand and weakening supply continue to exert positive pressure on Calgary's home prices. Believe me, no one's becoming an instant billionaire playing the Calgary market, but while other cities are seeing their housing prices plummet, there's no sign of a crash here. To put real numbers into perspective, we saw a $3,500 downward sag in our benchmark prices from September to October. Real money? Yes, but insignificant compared to the overall price of a home. We are down only 4% or so from last year's peak when other cities were going through unsustainably hot real estate markets. Those other cities are now dealing with a hangover as prices slide hundreds of thousands of dollars each month, and in some cases threatening to drop below pre-COVID levels. For Calgary, we can safely sum things up this way. If we're looking at other Canadian cities, they saw tons of speculation fueled by cheap financing, which grossly exaggerated their real estate pricing. Whereas Calgary has built its way back from a pretty slum 5 years or so to establish a real estate market based on sound fundamentals like simple supply and demand, and it's continuing along the same path. Now, this isn't to say that Calgary is immune to any economic downturn. If a recession hits Canada, it will most likely hit Calgary too, but our real estate market makes some of the strongest, most no-nonsense value propositions in all of North America. We didn't chase the easy money when everyone else seemed to, and now we're reaping the rewards. Now, how does this all affect you and what does it mean to you? It's simple. If the time is right for you, chances are that you can find a square deal in Calgary. Yes, prices are strong, but they're set to stay that way for the long run, which makes buying a home here less of a gamble than in any other cities and more of an investment. Your own situation will really dictate how you approach Calgary's real estate market, and we can only offer you advice that's right for you once we understand and we've learned about your goals and how you prepared you are to achieve them. But to give you a broad sense, if you need to buy a home, go for it. If you've been planning and saving for a home, this is the time. If you need to sell, there's a market of strong buyers out there waiting for your listing. If you want to invest in real estate for the long haul, Greater Calgary will do your investment proud. If you need to adjust your living situation, this is a good time whether to upsize or downsize your home. In other cities, the real estate market can push you around. Calgary's market might not give you whiplash with its ups and downs, but it can give you something much more important. It will give you the confidence to go out and make the best decision for you and for your family. I really appreciate you watching this market update. I hope it's helped inform your approach to the Calgary real estate market. And if you have further questions or want to know more about how current market trends affect your current situation, please get in touch. You can always go to planwithmike.ca, schedule a call, and let's have a chat.